All right, so most contractors think you need perfect credit to get equipment financing, but that idea is just flat out wrong. And it's actually the reason why so many crews are stuck waiting and projects are put on hold. So let's clear this up right now. Because I've worked with startup contractors who get like $50K or $100,000 with credit scores in the 500s. And they're not using shortcuts, they're not using special hookups. They just have a clear understanding of how the actual system works. And that's exactly what I'm going to walk you through right now, step by step. Hey, my name is Crandall, and I'm actually the CEO of Credit Suite, and I've helped thousands and thousands of contractors be able to get financing for all different types of reasons, especially to buy equipment. And the biggest barrier of them getting approved wasn't credit scores, and it's not time in business either. It's actually misinformation. Look, the truth is lenders care about only a few specific things. And if you know what they're looking for and you prepare the right way, then you can actually get approved, even if you've been denied before, even if you can't get approved. And you can get approved faster. You can get approved for more money. You can get approved for better terms. Again, even if you've been denied in the past. So how does this work? Well, let me tell you right now. First of all, let's talk about credit scores. You do not need good credit scores to get approved for equipment financing. Okay, 700 plus scores are not required. If you're just starting out and you're not generating any revenue in your business yet, then a lot of lenders want to see a little bit of a higher credit score, maybe a 630, 650 type of credit score. But if your business is already pulling in like 8K a month or 10K a month in revenue, then a lot of lenders will actually go down to the mid 500 range with credit score. Time in business only matters of like what type of credit, middle or below average, that you actually need to get approved. So why is this? It's because the equipment itself is collateral, right? It secures the loan. So if you stop paying, the lender just takes that back, right? They repossess the equipment. So that makes it easier for them and less risk for them than unsecured loans. It's why equipment financing you can get even with shorter time in business and credit challenge. Now, the longer you've been in business, well, then you are going to get better terms. So if you hit the 6-month mark and you're already in the sweet spot at that point, and if you cross the 2-year point, well, then that opens the door to like the lowest rates and the most amount of money and the best payment terms. But even if you're under 6 months, like you're just launching your business, no problem. You're still going to be able to get approved. No, the lenders will still like want to see certain things. Like they may want to look at some of your personal finances since you don't have enough business history, for example. So they might look at, your personal bank statements. They might look at personal financial statements versus business because you don't have a lot of history, right? But lenders care about stability more than they care about anything else, right? So one common benchmark is 100K in annual revenue. If you have that, about 8K to 10K a month, then they're going to look less at your personal and more at your business. Now, if your business isn't there yet, well, then you could just substitute personal income for revenue, right? You can show consistent personal bank statements and personal tax returns and personal income, and you can still be able to get approved. Now, let's talk about what you need to have ready before you even think about applying. So if you're financing equipment, let's say under 75K, then you're going to need about 3 months of business bank statements or 3 months of personal bank statements if you haven't been open for 6 months, right? You're also going to need like a detailed equipment quote. They need to know the model and the serial number and like the full cost breakdown of the equipment you're buying. And they'll typically get their own credit report. So you have to supply a credit report. Now, if it's over $75,000, then you're going to probably need full business financials like tax returns, P&L statements, stuff like that. And again, if you've been in business for a less amount of time than 6 months, then they may want some personal to supplement because your business doesn't have a history, right? And make sure that you're going to need about 10 to 30% down. So make sure that you have that. Whatever the equipment cost is, they're going to probably want 10 to 30% down. Now, keep in mind, you can get outside financing, other kind of financing to even cover that. And this is where most contractors actually mess up. They're applying the wrong lender when they're trying to actually get financing for their equipment. And that kills their chances. So what they're doing is they're applying for non-equipment lenders and they're applying for unsecured financing where they don't have the security, and that's why they get denied so many times. So you want to start with equipment-specific lenders, okay? Not your local banks, not online fintech lenders. You want to start with actual equipment lenders because they understand your business. They'll approve you faster. They'll accept lower credit scores because the equipment is actually what's securing the deal. Now, you expect about 48 to 72 hours to get approvals under 250K, a little longer for ones over that. And then after you do the step one, then step two is like you can go to alternative lenders. So, these kind of platforms, you can shop your application around to multiple lenders. It takes a few more days, usually 3 to 7, but they'll actually be able to give you even more options. So another alternative there. And finally, only go to your own bank if you been in business for 2 to 3 years or more and you have good credit. That's the worst place you could ever go unless you're really well established. So start with equipment lenders first, alternative lenders. Your bank is the last resort. Yes, banks can offer the best rates and they offer great approvals, but their process takes a long time and they're very, very, very strict to get approved. It's why it's kind of your last resort option. Now, here's where preparation makes or breaks the application. For banks, the next steps are absolutely critical. So for equipment specific lenders, okay, they're still smart and you can shave days off of your approval time from what you would with alternative or lenders or big banks. So before you apply, give yourself about a 72-hour head start. Make sure your equipment quote is detailed and in the proper format. Pull your credit and fix any issues. If you have issues on your personal or business credit, address those before you even apply. And then you can make sure your bank statements make sense. Make sure you don't have NSFs and overdrafts. You can actually calculate your down payment and have a plan to either give them that money or have outside financing that can cover that. Okay, that'll save a lot of time when you're actually going through this process. Now, you also want to double check your statements. Is there any large deposits or anything that they would question on that, and be ready to answer those questions because they're looking for these obscure, weird things on your bank statements, that stuff they're going to ask you for. And have anything else ready? Insurance, EIN, paperwork, your Secretary of State data. That's the kind of stuff that they're going to want to see. Proof of your address, proof of your phone number. So when you have that, it just saves a lot of time. So many times people ask me, how long does it take to get approved? I'm like, it depends on you. If you have your stuff ready, it's going to be way faster. So let's break this down based on what each type of lender has. They offer, all those kind of things. So you kind of know the specifics. So for equipment specific lenders, they work well for newer businesses, newer contractors. 550 to 700 type credit scores and solid cash flow. You can expect terms of 24 to 48 months, rates from 8 to 18%, and down payments around 10, 20%. Now, if you're for online lenders, they're great for established contractors who want to compare offers. You'll see 12 to 60 month terms, rates from 6 to 15%, and similar down payment requirements as well. Now, for banks, well, these are best if you've got 2-3 years in business because they oftentimes want to see 2 or 3 years of tax returns. You really need to have 700 credit scores if you're going to those big banks to apply. Now, terms can stretch to 84 months with rates of 5 to 12%, but approvals can take 2 to 4 weeks at least. Sometimes they take 2 to 4 months. So way tougher to get approved and way longer to get approved as well. Now, some terms you can negotiate the monthly payment, the payment due date, and occasionally even the down payment percentage. So none of that stuff's set in stone. Those things are negotiable. But don't expect to change your interest rate or sidestep documentation requirements because usually those things you can't get past. Now, before you sign, always look for hidden fees like early payoff penalties, mandatory insurance riders, balloon payments, or restrictive maintenance clauses. These are kind of weird things sometimes they throw in. And here's what this looks like in the real world. So let's say Mike, for example, right? Mike actually runs an excavation company and he's 14 months in, he's pulling $15K a month and he's got a 620 FICO score. Well, he needs a $42,000 excavator. So he went to an equipment specific lender. He gets approved in 36 hours, picks a 36-month term and let's say 15% interest with a $1,320 a month payment with only say 10% down. Now, final approval hit in 48 hours. The dealer was paid 3 days later. And in his first month with the new equipment, Mike generates, $23,000 in revenue. So that is ROI in action. So look, bottom line, you don't need perfect credit to be able to get approved for equipment financing. You don't need a 10-year track history either, right? You just need preparation. You need strategy. You need the right lender that's going to lend to you based on where you are. So if you want to explore financing options tailored to your unique situation, then check out the link below. I put it in the description. And let me know the comments. What piece of equipment are you looking to finance next? What are you trying to get financed? And if this video helped, then do me a favor, subscribe for more tactical strategies because I have a lot of them that will actually help you grow your business and get the funding that you need to do it. So once again, I'm Crandall. Thanks for watching. Let's build your business credit the right way.